Hello, everybody, and welcome to the channel. It's been a eventful past 24 hours or so in crypto, and so I just wanted to jump right into uh, the state of the market. So, as you can see, we can see a lot of red here on the crypto bubbles, and we got a lot of big bubbles, meaning things are down pretty substantially. I mean, you can see ETH down 8%, Bitcoin 5, Lido 16, near 12. You do have some that are green. One thing I will say is we have seen a pretty dramatic bounce after this pullback that we've seen. So that's the reason for some of the green here. We will go through and kind of take some looks at some other pieces of data that we're seeing here in the market today. Overall, we've seen a lot of fear in the past 24 hours or so, and I've got some data and some charts to show some of that, and hopefully we can walk through why this is happening and why we should not be acting off of too much fear or greed. So moving on to the fear and greed index, you can see here that we've got, we're sitting firmly in fear, on the edge of extreme fear as well. As you can see over the past couple of days, this has come down, pretty dramatically from where we were sitting pretty comfortably into greed. So, this is something that, some may say that, this was maybe expected or at least foreseeable, depending on, whether you're subscribed more to the bull or the bear case here. But anyway, as it is currently, we're seeing a lot of fear in the market, and this is happening kind of throughout the crypto market specifically, but also worldwide. And I think the fear that we're seeing on a global scale is what's I guess fueling maybe some of the magnitude of the pullbacks that we're seeing here in crypto. So if we move over to the RSI heat map, we'll be able to see here, over the past 24 hours, almost everything already was kind of sitting in the neutral to weak territory. But at this point, almost everything is sitting into oversold. I don't think anybody who's a crypto native. I don't think this is much of a shock to anyone. We have seen a lot of fear. We've seen a lot of pullbacks. We've seen a lot of sell-offs just kind of market wide over the past little while. However, what I will say though is, if we, I guess, jump back to the fear and greed index, we're starting to see fear, but we're sitting at, high 50s, low 60s, depending on where we're looking at. The last time we saw, I would say a sustained period of fear. I mean, we had some, I guess a couple weeks back where we were sitting kind of at the same range. But the last time we saw, this level of fear, we're going to have to go back quite a ways, probably late 2022 is this? I guess middle to latter half of 2022. We can see here, we've got sustained, fear or I guess fear or extreme fear, depending on what we're looking at. But I'm hoping you can notice the key difference that we're seeing here is, prices here were, half to a third of, even to a quarter, I guess, almost at some points, what we're seeing now. So obviously you can see that, the price points that we're at are very different. So, I think that potentially provides an explanation as to, maybe we're in more of a healthy market than we were previously, or, maybe we're at the top and we're about to, pull back a little bit further. I personally don't believe that's the case, and we'll go over why here over the next several minutes. But the next thing I want to show is essentially why we're here and some of the main issues that we're seeing in the broader crypto market. So the first thing that we're seeing is, I'm sure many of you have heard about the unwinding of the Japanese yen, but maybe you're not necessarily sure what that means in the market, right? So ultimately what's going on right now is, so the Japanese yen has been used as, I guess, like a tool for financial leverage for a lot of people and a lot of investors lately. And the reason why is because the Japanese interest rate environment has been much lower than essentially anywhere in the rest of the world recently. So, and the reason for that is because the Japanese market and frankly the yen as a whole has been relatively unstable recently, and so the Japanese central bank has had to react accordingly and keep interest rates lower than maybe what they should have been. So in order to I guess in order to like buoy their currency, they had to keep the interest rates low, right? And so essentially what people have been doing is they've been taking yen and then they will have been swapping it into other higher interest currencies. Think of the US dollar, the pound, things like that. And then they will essentially use that as almost a leverage tool to maximize their returns, because they're essentially they're taking their money from a high interest environment, or I guess from a low interest environment, and investing it into a higher interest environment is a sense to like leverage their returns, right? This would essentially be the equivalent of taking like, Bitcoin, which is a relatively stable cryptocurrency. Obviously it's a cryptocurrency and all crypto is volatile, but it would be like that, using the lower returns, the higher stability from that, and then parlaying that into like, let's say a micro cap coin, or even just like a mid cap altcoin that might provide you some larger returns. What that's going to do is that's going to essentially help, I guess, increase your leverage, because you're trading on like a stable coin or something that's lower volatility and has a lower interest yield. Where if you were to, let's say, borrow ETH, your rate might be higher than if you were to borrow or collateralize Bitcoin, right? So let's move to this chart here that we're seeing. And what we're seeing here is, we've got cash equivalents. This is essentially like low to high risk, right? So we've got cash and cash equivalents. And then since we go all the way up to like options, crypto, kind of where we're at, right? And so what's happening with this Japanese yen unwinding is people are essentially having to sell their investments to pull back and I guess trade out of the yen, because the global economy is pulling back. Like there's a general sentiment that interest rate cuts are starting to come about in the next month or two. So part of the reason for like all this whole sell-off is people are having essentially to sell their assets, unwind their essentially their leverage trade using the Japanese yen, and then pull back into their main currency, in which case they could potentially go back and buy their position or do something else. This has obviously caused a pullback. This pullback obviously causes fear in the market. And as you can see, fear essentially trickles down the pyramid, right? So the things at the top are going to be hit hardest, with the things at the bottom being the least impacted. Obviously cash equivalents. This would be, currency pair tradings you could think of here if you're coming at it from like an investment perspective. So obviously crypto's at the top. This is why we're seeing such an outsized impact within the crypto market overall. But yes, obviously, you are seeing stocks being hit. We may potentially start to see some real estate valuations come back potentially. Obviously bonds and debt, they're going to be starting to trade. I guess the futures of these bonds and debt are potentially going to be starting to trade at a more discount, because they're expecting these rates to be hit. And then, obviously people are not going to have as much confidence in the safety of where they are currently. And when that happens, people always pull back to a more risk averse asset. So to show this, we can see, kind of, well, what does this mean for Bitcoin? What does this mean for crypto? What does this look like long term, right? So you may have seen this before. This is called the Bitcoin Rainbow Price Chart Indicator. Essentially what it is it's a chart that shows Bitcoin on like a logarithmic scale over time and how it looks over time. So if you look, the darkest red is maximum bubble territory, and then the darkest blue is going to be like fire sale, right? So, and as you can see throughout history, Bitcoin has followed this relatively consistently overall. Obviously in hindsight, if we were looking at a $16,000 Bitcoin, that was falling outside of the fire sale territory, which would obviously have historically been a fantastic buy. Now what we're looking at here is we're seeing Bitcoin coming back into like the buy range. So it's not necessarily the best deal you could possibly get, but it's for sure on the lower end of, where we are at on like the value indicator as per like the rainbow price chart. So next we're going to look at the stock to flow, which again looks something similar. It essentially treats Bitcoin as being comparable to commodities. As many of you may be aware, a lot of Bitcoin has started to take on a life of its own as essentially digital gold, right? So that's what the stock to flow model essentially monitors, or I guess values it against, is the traditional price growth of a commodity, and where does Bitcoin fit essentially on that scale. And as you can see here, we're seeing that it's a little bit below what would the stock to flow would predict at its current valuation, which historically might be a good time to buy, historically speaking. And then obviously, as you see, we've got these max peaks in Bitcoin, and you can see where it, sometimes quite dramatically outperforms the stock to flow model. So, this is something where, even though we're seeing pullbacks here, this is something where, if we zoom out and look at a larger picture, this actually, depending on, if you are bullish on Bitcoin and believe in the value of Bitcoin and cryptocurrency as a whole, this could be a wonderful buying opportunity. Obviously nothing I say is financial advice. You need to make your own decisions. Listening to people on YouTube would be a very unwise decision for anybody to make. But I personally have been buying. I've been seeing this opportunity as a pullback, as a great opportunity to see some discounted prices, both in Bitcoin, Solana, Ethereum, a lot of the main ones. I would say I'm more on the conservative side of a crypto investor, if one such exists. But I would say, I'm on the more conservative side. So, I'm putting mostly, money into Bitcoin, Ethereum, Solana, some of the larger cap coins. I'm not necessarily going in on some meme coin that's dropped from, 10 million to 500,000 because I think it's going to 20x or whatever. That is not something that I'm super comfortable with, but obviously, you need to make your own decision. You need to figure out what you're comfortable with and then, act accordingly. The last thing I want to talk about with kind of, I guess, the silver lining of Bitcoin and the crypto market potentially is the Fed rate. So the Fed rate is essentially a way of, this is what sets interest rates throughout the country, and in some cases in many parts of the world, if people do a lot of trading using the US dollar. And so what you can see here is that the federal interest rate, there's essentially, people place predictions on what the Fed is going to do. And historically, the higher interest rates are, the worse it is for high risk, high volatility assets. Venture companies, crypto, things that are, essentially thrive on either debt, or they thrive on essentially investors wanting a higher risk premium, right? So the way to look at this is, if the current Fed rate, which you can see right down here, the current Fed rate is 5.5%, that's a somewhat reasonable return, for an investor. Why would they not just keep their money in treasury notes and earn a nice 5.5%? Well, as we saw a couple of years ago, if this number's down at 0 or 0.25%, that's obviously not a very attractive return for the average investor. So in that case, they have to start looking other places for them to, essentially find their returns that they're wanting. This is when, stocks, crypto, venture funds, mutual funds, hedge funds, all these types of things that thrive in essentially investors needing a larger risk, or like risk premium. This is where they thrive. So, this is something where, if we look at last week's probability, keep in mind our rates are 5.5%. Last week's probability was almost a 90% of anywhere between a quarter and half rate, or 0.5% rate cut. Usually, at least from what I've seen, they stay closer to the quarter. So people were expecting a 0.25% rate cut, almost 90% certainty. Yesterday, and I think this is technically Friday, because that's when, the market was last open. On Friday, things started to, sort of collapse a little bit, but not anything too crazy. This had flipped, almost 3-to-1, that we were going to see anywhere between 0.5 and 0.75 of a point rate cut, anywhere in this range. Again, mostly on 0.5%. And then today we're seeing almost a 90% probability of that happening. So, this is essentially leading, speculation that interest rates are going to start to get cut, and potentially get cut rather quickly. This is part of this is because of the SOM rule being hit or being triggered. This is a rule that historically has shown it essentially predicts recessions. Historically, this has been something that we have seen in the past go fairly, fairly accurately, you could say. So this is why there's a lot of speculation that the rate cuts are going to start happening, and they're going to start happening fairly dramatically. We can get into the kind of some of the more details in the future about the SOM rule and what that means, and unemployment, and how all of this affects the global economy as a whole, also as well as cryptocurrency, which is obviously what we're all focused on. So despite all of the fear and the blood and everything that we're seeing in the market today, what we are seeing is very, very high probabilities of rate cuts, and potentially even dramatic rate cuts when we hit September's meeting, which is midway through, so about a month and a half from now. So this is something we'll monitor over time, and it will, I think, play a factor in the health of the crypto market. I think if rates start to get cut, and they start to get cut dramatically, this actually could be a pretty bullish thing for crypto long term, which is why I personally am viewing this as an opportunity to buy more crypto, because I think this fear is overblown, especially if this is what happens and this is what we see happening in the future. So anyway, if you found any of this information valuable, please feel free to hit like and also subscribe to my channel. Like I said, in the future, we'll be going over a lot more information regarding the state of the global economy, the state of crypto itself, the some technicalities with what has previously been like a 4-year cycle, things like that. So if you find any of that information interesting or valuable, please do share this video, get it to more people, and then also subscribe so you can keep up with these future updates. So anyway, thanks for tuning into the channel, and we'll see you in the next one.